I want to tell you about a conversation I had with a business owner last month. She was looking to buy a building her manufacturing business had been renting for 5 years. Her landlord wanted to sell. She wanted to buy. But when she went to the bank for a commercial real estate loan, they wanted 30% down and offered her a 15-year term at 8.5% interest. She was frustrated because she had a profitable business, good credit, and steady cash flow. But she couldn't make the math work with those terms. That's when I told her about SBA 504 loans. 6 weeks later, she closed on the building with a 10% down payment, a 25-year term, and a fixed rate under 7%. The difference in her monthly payment was nearly $3,000. Most business owners have heard of SBA 504 loans, but they don't really know what they are, even though they're one of the best deals available for real estate and heavy equipment financing for small businesses. In this video today, I'm going to explain exactly how 504 loans work, who they're designed for, and why they might be the perfect tool for your next big purchase. So, what is an SBA 504 loan? An SBA 504 loan is a special government program designed specifically for real estate or heavy equipment purchases. Unlike SBA 7A loans, which can be used for almost anything, 504 loans have a very specific purpose: to help small businesses buy owner-occupied real estate or expensive equipment that will help them grow. Here's how the structure works, and this is important because it's different from every other loan program. A 504 loan is actually 3 separate pieces working together. The first piece is a conventional bank loan for 50% of the purchase price. The second piece is an SBA guaranteed debenture for 40% of the purchase price. And the third piece is your down payment, which is typically 10% of the purchase price. So if you're buying a $1 million building, the bank provides the entire $900,000 in funding, $500,000 of it as a conventional loan, and $400,000 of it as a SBA guaranteed portion. You provide $100,000 as your down payment. The SBA doesn't actually lend money. A lot of people get this confused. They guarantee 40% of the bank's risk on this specific program, which is what allows the bank to offer you better terms, higher funding amounts, longer terms, etc. The bank loan usually has a variable rate tied to prime. The SBA guaranteed portion has a fixed rate for either 10 or 20 years, depending on the amount. Your job is to make payments on both portions. The reason this structure works so well is that it spreads the risk across multiple parties, which allows for better terms than you could get from any single lender. So who qualifies for SBA 504 loans? SBA 504 loans are designed for established businesses that are profitable and growing. The SBA typically wants at least 2 years of profitable operations, strong cash flow, and a clear business case for why the real estate or equipment purchase will help your business grow. Your business must be owner-occupied, which means you must use at least 51% of the property for your own business operations if you're going to use an SBA 504 to acquire commercial real estate. You can't buy an investment property or a building that you're going to lease entirely to other tenants. The SBA wants to support businesses that are investing in their own operations, not becoming real estate investors. The business must also meet SBA size standards, which vary by industry. For most businesses, though, that means fewer than 500 employees or less than 25 million in annual revenue. Most small and medium-sized businesses qualify easily. Personal credit requirements are typically 660 or higher, though some lenders will work with borrowers in the lower 600s if factors like cash flow or collateral are extremely strong. Business credit is also important, as is your track record of paying obligations on time. Eligible properties and equipment. SBA 504 loans work for most types of commercial real estate, as long as your business is going to inhabit 51% or more. Office buildings, retail locations, manufacturing facilities, warehouses, and mixed-use properties where your business occupies most of the space. For equipment, The rules are a bit more specific. The equipment must have a useful life of at least 10 years and must cost at least $50,000. This typically includes manufacturing equipment, medical equipment, heavy construction equipment, and specialized technology systems. Regular business equipment like computers, office furniture, and vehicles usually don't qualify and would be better suited for an equipment financing program. The property or equipment also must be located in the United States and must be used primarily in the business operations. Speculative purchases or investments don't qualify. The financial advantages of 504 loans. The biggest advantage of 504 loans is the down payment requirement. While conventional commercial real estate loans typically require 15 to 30% down, 504 loans require only 10% down in most cases. For special situations, the down payment can be as low as 5% or even 0%. The lower down payment SBA 504s are accompanied by a slightly higher interest rate though. Just FYI. The second major advantage is the fixed rate portion. The SBA guaranteed debenture portion of the loan comes with a fixed rate for either 10 or 20 years. This gives you predictable payments and protection against rising interest rates. Even when the bank portion has a variable rate, having 40% or more of your debt at a fixed rate provides significant stability. The terms are also longer than most conventional loans. While banks might offer 5 to 15-year terms for commercial real estate, 504 loans can extend anywhere from 10 to 25 years, which significantly reduces your monthly payment and improves cash flow for your small business. Another advantage is that 504 loans often require less personal guarantee than conventional loans. While you'll still personally guarantee the debt, the SBA backing reduces the lender's risk. The application process. SBA 504 loans take longer to process than conventional loans, typically 60 to 90 days from application to closing if you're working with somebody that knows what they're doing. But the extra time is usually worth it for the improved terms. The process starts with finding a bank that works with 504 loans and a certified development company, or CDC, that processes the SBA portion. Documentation requirements are extensive. You'll need 3 years of business tax returns and personal tax returns, a couple of years of financial statements and a year to date, a business plan with projections, environmental assessments for real estate, equipment quotes for equipment purchases, and detailed project cost breakdowns, and a lot more. The underwriting process happens in parallel. The bank underwrites their 50% portion while the CDC underwrites the SBA portion in most cases. Both must approve the deal before you can proceed to closing. The long-term commitment. One important aspect of 504 loans that many borrowers don't fully understand is the long-term commitment involved. The SBA requires that you use the finance property for your business operations for a significant period, usually until the loan is paid off. If you sell the property early, you'll likely need to pay off the SBA portion at closing. There are also ongoing reporting requirements. You'll need to provide annual financial statements to the CDC for the life of the loan, and there may be periodic site visits to confirm the property is still being used as intended. This isn't necessarily a drawback, but it's important to understand that 504 loans are designed for businesses that are making a long-term commitment to a location and operation, not for businesses that might want to relocate or change their model in a few years. When 504 makes sense versus alternatives. SBA 504 loans work best when you need to finance real estate or heavy equipment, and you plan to stay in that location for long term. Conventional commercial real estate loans might work better for you if you need faster closing, if your down payment isn't an issue, or if your business doesn't meet SBA requirements. SBA 7A loans might work better if you need more flexibility. in how you use the capital, or if you're not sure about the long-term commitment. The key is matching the tool to your specific situation and what you're looking to accomplish. 504 loans are powerful, but they're not the right answer for every business or every single situation. SBA 504 loans are one of the best kept secrets in business financing. Lower down payments, longer terms, and fixed rate portions make them incredibly attractive for the right situations. If you're considering buying real estate for your business or investing in heavy equipment, a 504 loan might save you hundreds of thousands of dollars over the life of the financing. The process is more complex than conventional financing, but for most businesses, the benefits far outweigh the extra complexity. If you think a 504 loan might be right for your situation, we can review your business and explain your options. The consultation at Small Biz Heroes is completely free and will give you a clear picture of what programs you qualify for and what terms you can expect, and why those programs are likely to be the best option for you at this time. If you want to get in contact with us directly, all you need to do is give us a call at our toll-free number, 888-859-8408, or click the link below to apply. I'll see you in next week's video, everybody. I hope that this was a good one and very valuable, and as always, I'm rooting for you.